This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless Trading Frank. It's approximately 8:35 p.m. Eastern Standard Time on July 18, 2019. Kind of a rainy afternoon out here on the waterfront on Jersey City, overlooking the beautiful New York City skyline. And welcome. Session will be recorded, uploaded to the Google YouTube channel for viewing by all other members and free trial subscribers at their own time, hopefully sooner than later. Full disclosure, this is purely for financial education, not for any solicitation or advice. On that note, let us begin. A couple of quick reminders that I'd like to plug in every single time. Number one, get a lot of friends and colleagues to join us. We go by referrals and people who find us because we're pretty exclusive. We don't go around bombasting every other social media site telling you that we're going to make you a millionaire. You can, but we don't go around talking that type of garbage. This is straightforward, no BS service here at Clueless Trading. And secondly, you have to follow the Instagram channel. Highlights of options trades with the option charts are posted there every evening. I put it out there. The highlights are some of the biggest trades that we have done. So if you do want to see things you have already done or missed, well, that's a great venue to check out. It's also for promotional marketing purposes, so we can get the word out. And Adam is a prime example of somebody who found us on Instagram, and I thank you for doing that. So let's begin. First of all, the market's making new highs almost every single day. Futures right now are up 7 points. We're at 3,004, almost 3,005 on the E-minis. It's telling you a lot. So anything that you bought today at the lows of the day, when I told people to basically buy the market based on my charts and not just secretive charts, things that I share with everybody every 15 minutes, every 30 minutes, every hour. So if somebody just acted on it, and if you're a futures trader, you could actually sell for how many points? You got 2974 here. It's at 3,005 for 25. You got 25 handles you could sell right now if you just followed my charts. These are live futures charts, right? Told you guys to buy it here. And for people who are not futures traders, or I'm not a futures trader at this point. If I was, then I wouldn't be able to stay. I'd be awake all night, and you guys wouldn't get these delicious rewards and trades that I deliver all through the day. But if I was a futures trader, I'd be clocking in 20, 25 points right now and saying, you know what? I just made my month. The only way you can do it is if you're a tactical trader. You cannot just do it because you feel something. Our feelings, our emotions mean nothing. Nothing when it comes to the reality of making money in the US financial markets. And you have to believe that. When you feel comfortable, it's a time to sell. When you feel anxiety and stress, and the charts are matching up, the indicators, the internals are telling us they're deep oversold conditions, whether it be the stochastics, whether it be the McClellan oscillators, whether it be all those different things that I show you all day long. Those are the perfect moments. So if you're not there, you are not going to make money. It's really as simple as that. Now, that's a very hard thing to do because the common sense that we use in our lives to provide for our families, to work, and to do our careers is upside down when it comes to the stock markets. So think about that for a minute, ladies and gentlemen. Okay? So I went through a bunch of things that would happen this week based on the economic indicators. I told people, I explained to people which things matter, which things don't. Today's the 18th. Tomorrow is going to be the 19th. Sorry. So I'm going to make this a standard format. Every webinar, we do Sunday evenings and Wednesday evenings and back to Sunday. No reason to do it every night because it doesn't make any sense. If you just followed the Sunday webinars and the Wednesday webinars, which is basically I delayed it by a day on Thursday, and that's all you need. Like they say, TMI, too much information never did anything for anybody. You just have to act on it. So tomorrow morning, all this is gone, right? So this is told you the beige book was important. Is a market catalyst. James Bullard, another Fed governor, speaks tomorrow. This is a very important number on Friday at 10 a.m. The consumer sentiment numbers, very important. Consumer sentiment drops hard. The market is going to dip a bit. The market's still going higher for a simple reason. Because our great Federal Reserve Chairman, Jerome Powell, has openly stated that he's going to keep interest rates low to make sure the U.S. economic expansion continues. What more do you need to know from the most powerful central banker in the world? It doesn't matter. If my boy Donald from New York screams at him, and tweets out that he doesn't know what he's doing, those are the most stupidest statements ever. But Donald's doing it because of politics. He's not doing it because he doesn't like Jerome Powell. I think he likes him because he nominated him. So every Fed governor goes through those attacks here and there. Previous presidents haven't done that really, but then our boy Trump is a bit of a talker, just like all of us in New York. We're a bit of talkers, right? So the bottom line is that these speakers, whatever they say, yes, they will matter a bit to the market, but the reality is Jerome Powell has openly stated in the congressional and the House testimonies in the past 1 week or so and previously, that he is ready to cut rates as needed. They're going to cut rates July 31st. And make sure that the U.S. economic expansion continues. What does that mean for the stock market? Overall, the stock market's like higher multiples, i.e. PEs, on stocks, and the only way you get that is through earnings, which are very important, very critical. We're in the middle of earnings season. We've been hitting a lot of home runs on the earnings that we're going to look at a couple tonight after this little economic lesson for you guys. And earnings season just started. You want to grow your account real fast? Buy a little bit. Buy one contract of my earnings alerts that I put out there. Buy a basket. You're going to hit one because every single day out of those 4 or 5 that I put out there, at least 1 or 2 are up 300-400% on the options trades. Fact, go through my Twitter feed. I don't have to make these things up. And 1 or 2 of them will be flat and the others might just fall apart and zero. We're going to talk about 2 things tonight. We're going to talk about how to be smart, how to be a smart trader, not a complete idiotic emotional trader. We made money for people who did my straddle on Netflix. We made some nice money. Netflix was down a gazillion points. It was down at 1.45 points. Ended down 37. Who cares? We're going to look at the actual charts, which I put out there on the actual ROI percentages. I hope both of you saw it. Did you? On the Netflix?
I did not see that.
Okay. Were you following my Twitter feed during the day? I know you're busy, so I'm not going to hold you to it.
Yeah, I was. I tried to, but I missed
Okay.
that.
So I suggest that you highly see that because words don't matter. It's the actual numbers. I put out the actual ROI performance on the straddle trade. A straddle trade was where you buy both sides of the coin. And we're going to do that on a bunch of stocks as we move through earnings season. So in the most simplistic way, one call of Netflix 380 on the long side for next week went to almost, it was down 90%. They were $8 a piece, and they went to 50 cents and 20 cents. The short side, which was the other side of the straddle, which means you're betting that it's going to go down. You're basically covering your butt on both ends. The stock has to move big. Otherwise, the straddles don't work. That one we bought at $3 and change. That went to almost 20. So if 300 goes to 2,000, you just made yourself $1,700. And the one which is 8 went to, let's say it went to 0. You lost 800. What's 1,700 minus 800?
900 bucks.
Thank you. You just made $900 on a straddle trade. And that's pretty nice. Okay, so that's how it happens in the business. But those are extreme scenarios. I don't expect everyone to do it, but that's just the way it goes. Okay, so Friday we have consumer sentiment, very important. We want this number to stay reasonably high, and then the Fed governors will basically speak their mind. So that's pretty much it for this for the end of the week. All right, let's move on. Let's take this out, and we are going to look at stocks. So first of all, I know Adam, time to time, I know you have a pretty busy schedule in your job. You do trade the E-minis, correct?
Yes.
Okay.
And some other commodities as well.
Okay, sounds good. So I don't trade commodities. I use them as proxies for the market. In other words, I look at them to see how the market would react on the front end. So let's look at this chart here. How much money would you have made? Or maybe you did some.
I trade one contract at a time.
I don't give a hoot how many contracts you trade.
So it would have been, like you said, had I got in at the bottom and sold at the top.
But forget the bottom or the top. What if you understood my charts and look at the symmetry? I'm looking at this, it's talking to me. Forget the bottom. Nobody really buys at the bottom other than guys like me. So what if you bought here? What if you bought here?
Yeah, so if you would have bought at 29.87, then sold at 3,000, that's 13 points, which is pretty good.
Which is damn good.
Yeah, that's good.
Yeah, damn good. When was the last time you made 13 pips or 13 handles on an S&P trade? So
it does not happen very often.
Exactly. So what I'm getting at, because you're bringing some good points in, I'm not I'm working with you on this, is you gotta follow my charts. When the markets were down 150 points today, who said buy? I did. I'm sure some of you follow other services and all that stuff. Did they say? And if they really did that, then I'd like to meet with them, collaborate with them, and be a little bit more smarter. Now, how did I do it? Magic, right? No, I followed my charts. Every reasoning as to why I put out an alert is delivered on my Twitter real-time feed in 90% of the time, with a reasoning why I'm doing it. That is what you call the ultimate trading alert service. I actually put in a reason other than the visual pictures with the arrows as to why I'm doing it. Now, if some of you are not understanding that or following it, that has nothing to do with the content being delivered or the charts or the technicals or the indicators. It has to do with baggage that you all carry in your head. And you refuse to take in free money in your pocket because you are, I'm not talking about you, but it's just in general, emotional traders are so shit scared all the time that it doesn't matter if it's a bull market or a bear market. If I'm giving a 1,000% options trade, they're still not going to do it. In that case, do not be a trader. That's why most people don't make it as traders. So I'm here to encourage people, not to discourage them. What I'm basically saying is that I had reasons, real technical reasons and fundamental reasons, which I process in my head, as to why that sell program that came in today on the 18th at around 11 a.m., actually started around 10, right there, was a false one. Now, I've been doing this for a while. I don't know the answers to everything, but I know the answers to a lot of things. I know the algorithmic high frequency trading programs want to basically get people out of positions, period, before they run the market higher. We're in a bull market. The bull market has not broken. The bull market will break, in my opinion, in the month of August for a short time, for maybe a month or two overall. And then we should end the year on a very strong note. The months of September, August, September, and October are always very shaky, but it's never a straight line down. It's always a pullback, a sharp move up, and boom. And we make money of those moves. So my point to all of you, new and old, is that act. If you don't act, you will never make money. I don't care whether it's the short side or the long side. And you all know that. Come on, you all know that. So I'm looking at pattern structure. I just want to show you pattern structure because remember, on this chart, I didn't even show the internals. I simply showed the pattern structure. This is why I work with people one-to-one as much as I can on the advanced coaching sessions, on the complementary sessions that Adam is going to go through. Look at this futures, just ramping right now, just ramping. We're up like 9 points. By the time this session is done, we're going to be at 3017, or possibly at this supply level here at 3012, 3012. Just watch. Because the price chasing idiotic traders, whether they be futures or stock traders, right now are getting their the butts handed to them. You cannot just chase prices to make money in the market. You have to mix that in with the technical patterns. This is where I specialize in, which I've proven over and over again. Remember, when the markets are going up in a straight line, which they're really not, but kind of zigzagging straight high, everyone's a freaking genius. But when markets fall, case in point today, case in point back on the at the beginning of July. This is actually July. This is the month of July, starting here. Look at the volatility in the month of July. We have caught almost 90% of these moves, primarily on the upside. And we have shorted the market, as you know from my Twitter feed, intraday for large, substantial profits. 18-cent calls. Look at my Twitter feed. And if you don't look at my Twitter feed, there's no point to you guys being in my service. They're being straightforward. 18-cent calls, hedges that I put out there, 298, the SPY 298 and a half, sorry. The SPY yesterday, when the markets broke, okay, yesterday was the 17th, yeah. And this moved down. So I asked people to buy the 298 and a half puts expiring the same day, which was yesterday, which was the 17th. Did you see that alert, Adam? And I'm not holding you to it.
I did see that. Yep.
Okay.
I did.
They were 18 cents when we got in. Call it 20 cents, whatever. By the end of the day, they went to $1.03 because, as you know, options can be traded till 4:15 p.m. on the indices. I was mostly out around 30 cents, 25 cents, 60 cents, and I did not catch the $1.03. So let's do the math here. 18 cents go to $1.03 because I'm the one who told people to buy it. So I delivered the goods. So a $1.03 you could have sold right after 4 p.m. They're 18 cents for God's sakes. So if somebody comes to me and says, well, I don't really have a big account, I'm just going to smack them hard because that's the most idiotic thing. 18 cents. So let's say you bought 10 at 18 cents. That would have cost you $180. Okay, so if you bought 10 of these puts, it'll cost you $180. By the end of the day, I'm looking at from start to finish, they were at 1,000 to be exact, 1.03. They were $1,030. That, in simple math, is okay. In simple math, is a 472% gain on your money and a net profit of I want to be exact on this, okay? That's why I'm just punching it in 1030, $850. And this is all by trading charts. Because none of us, and forget about the rest of the crowd out there, are smart enough or wise enough to know every single volatility move in the market and why they're happening. Because there is no reason a lot of the time why it's happening. Because the machines are driving it. So if you think you're going to sit there and be a PhD economist from Harvard or Stanford or Princeton or Chicago School of Business, which are some of the best economic schools out there, then you're just wasting your time. KISS, keep it simple, stupid. And the only way you keep it simple, the KISS principle, is to track and trade tactical charts. So $850 you would have made on 180 bucks. That's 472%. So does anybody hold it from start to finish? I don't know. Some traders might have. I didn't. I just scalped big portions of these. 18 cents for God's sakes. I saw it on my charts. Now along the way, there are little hiccups. They start to move the market a little bit because they're a little short covering. But you could have, if you bought 10, you could have sold 3, 4, let the others ride. Because 18 cents to 60 cents is 233%. And yes, then you could have ripped your head out in your hair. I mean, your hair out and say, oh my God, why didn't I hold it all the thing? Doesn't matter. You could have made 233%. What, in an hour? So all those bullshit excuses that people give, like, oh, you know, I could have done it. This is happening every single day. I'm not talking about 472% every single day. Yes, we have solid profits, 100%, 80%, 90%. Calls just going berserk. So the key about trading is gotta be, in order to control your emotion, stop being a full-scale idiot most of the times. This is what traders go to bed with. You know what most traders go to bed with? Oh man, I could have done that. Oh shit, why didn't I hold it? That's what most traders go to bed with, male and female. So how about going to bed with the fact that I did it? Yeah, I didn't get the 470%. I got maybe 230%. How does that feel? I think that feels a lot better when you go to bed than making a bag full of goddamn excuses as to why you didn't do it. End of story. Now, saying all that from the behavioral part, which I can't change, you guys are all adults. Some of you have kids, so you teach your kids how to do the right thing. It's about risk. And the only way risk can be managed in these types of markets, this is not grandpa's market. Did grandpa, or even 10 years ago, these legacy traders who are running a lot of the services, oh, just buy the market, it's a 50-day move over, blah, 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 blah. Garbage. Oh, look, it's an uptrend. No, nothing's a real uptrend. The market over a long period of time is on an uptrend. In between, this is what it looks like. This is why the machines, the advent of the robotic algorithmic high frequency trading machines, which I keep on plugging into you guys every single minute, will screw you guys if you do not follow these tactical charts being delivered by Clueless A Trading. It is not a beautiful straight line up. It is like this. You are seeing it in front of you just in the month of July. This, ladies and gentlemen, I'm sure you guys know how to read the calendar. Not being sarcastic, just being direct. This is the month of July. And if you think that you can trade the market by just chasing prices and not tracking my charts, whether you're a swing trader or a day trader, doesn't matter, then you're living in some la-la land I don't want to live in. Always remember one thing. I'm a happy guy. You know why I'm happy? Because God has given me another day to live. That's why I'm happy. I don't know if you guys think like that, but I do. I got a lot of things in my life. It didn't just drop from the sky. I ain't no Dubai billionaire who, just handed a trust fund for $100 million and say, go buy those Lambos and stuff. We have some nice cars. Everything was built with hard work. So if you guys don't want to really work hard, as in like trading off charts, then what did Donald say? I mean, I thought that was pretty nasty in my own thing. Like, go back somewhere where you came from. In the case of traders, go back to that little cave that you want to live in and make excuses. If you just want to stop making excuses, do this stuff, okay? So this is an extremely volatile market, guys, all right? And none of you are experts enough to analyze every single economic number or comment coming out of Mnuchin, our Treasury Secretary, or the Chinese, or this and that. Because the game theory aspect of the market, which goes behind all this work that I do for you guys, and the levels that I draw, which is the technical part, but the fundamental macroeconomic game theory part, to splice out. Remember what they say in life: every a comment coming out of a government leader or economic team or blah, blah, blah has layers of meaning. I don't think that many of you have the capacity, and I don't mean it in a bad way, because you guys live in a straightforward world of 1 + 1 = 2. I don't. Game theory suggests that in a particular, when you put a set of variables into a particular equation, there will be different outcomes. That's life. In trading, it's far more. So everything, comments and stuff that you see, headlines coming out, whether it be an economic report out of China, it is never black and white. China's trade numbers and stuff are horrible that came out this weekend. Their market still went up. Why? Because the lower their numbers are, the more stimulus and money they're pumping into the economy to make sure that 2+ billion people are going to be happy. The same thing is happening in the United States of America. The worse economic numbers get, which they're really not, the Federal Reserve is more open to cutting rates. If we start getting strong economic numbers between now and July 31st, I can assure you the markets are not going to like it. Now, you might say, why? Well, the economic numbers are great, so why is the market liking it? Because that means the Federal Reserve of the United States of America are less apt to cutting rates. Cutting rates means you want to inject vitamin B12 into a weak body to get it moving. So if the economy is going stronger, the Fed will be less inclined to cut rates. The markets will fall. We want economic numbers to be somewhat soft. So the Fed will cut 25 or 50 basis points, which is quarter or half a percentage point on July 31st. Did you guys understand what I said?
Yeah, I totally understand it.
Okay, what about somebody else like House or Mike or Trina? Did you guys understand the fact if we get strong economic numbers, like which come out every week, the markets are going to fall? Because that means the Fed is going to be less inclined. I mean, I can't make it any simpler. I'm speaking English, right? The Fed is going to basically at that point say, you know what, maybe we won't cut rates. They will cut rates because he's promised it. So he can't go back on that. Like he said, it's an insurance cut. Not really needed, but it's an insurance cut. But the market might like the fact that after that, he might not cut rates because the economy is going stronger. So the markets will just come down a couple of hundred points, maybe 1,000 points, and then realize, you know what, things are fine, and then move from there.
Hey, Frank, I got a question for you.
Go ahead, Adam.
Do you think there's a possibility that the rate cut at the end of the month is going to be a sell the news event?
Yeah. But how would you know that if you didn't follow the charts? You see, this is why you're with us, and that's why we had that great conversation like I do with all my new members, that yes, those are simplistic ways of looking at it and a smart way of looking at it, how you said it. But the only way you know it's going to be a sell the news event is if you track my charts. End the story. The market might fly out and go to 3,500 if the economic numbers are strong and we get that quarter or a 50 basis point cut. It'll only be a sell the news event. And a great question, comment on your part, by the way. Very smart comment, mind you. Is the fact that if we are technically extremely overbought on multiple technical indicators. You understand what I'm saying?
Yeah, I see what you're saying.
Exactly. But if we are not, the markets will go higher. It is all about technicals. It will not be a sell the news event if we are down 500 points prior to that. It'll be
Right.
a buy the news event. You got it?
Yeah, yep, I understand.
Exactly. Okay, so great. Thank you for commenting on that. And thanks for all the silence that I get from my old members. I'm just kidding. Busting you guys' chop. House, what's happening, man? You don't talk anymore? So House has been with
I
us.
do.
I know. So I asked a question. He never responded back. You know what my dad would say if he was alive? He said, that's rude, son. Exactly. I asked a question and stuff, and you didn't even bother answering. That's okay.
I always answer, you know that.
Yeah, but you didn't answer right now, did you?
I didn't.
Exactly. Don't worry about it, man. Okay. You know I love you. Okay. So bottom line is, House is another one of those few people who've actually seen my ugly face. So he can say, Frank, you fat guy, like I'll slap you around. So just kidding. All right. So let's get back in the technicals. Very, very choppy market, guys. Short-term picture just in the month of July. You can see that was the big gap open. You might wonder why there's a green thing here, because this is where we had come from. So let me squish it and go all the way higher. This is where we came from, right? So this huge move up, and this was going all the way back to June. Let's go back to June. Wow, see that? So when you look at the bigger picture, and I always like to keep an eye on the bigger picture and then try to protect my profits on the short. I mean, you guys all do the same thing too, is the fact that we are on a pretty substantial uptrend, because this is the month of June right there. 1 second, guys. House, by the way, good to see you, man. Everything good at work?
Oh yeah, everything's great.
Yeah, you've been busy with working for the big G, right? So
Extremely
exactly,
busy.
we all
Yeah.
mentioned that there are a couple of G's, as in companies which start with the word G. Okay, so good for you. Okay, so the month of June, and this is where we are. This is where the month of July started, ladies and gentlemen. So if you look at a simplistic way, which I like to look at both the simplistic part and then the technical part on a short-term basis, is Higher. Higher. Is it higher forever? No. My charts that we're going to look at tonight are going to say what I think the market can go to, which is 30.30 to 30.40. We went to 30.30 already, I believe, on the S&P 500. When I had said it was going to go to 30.20, it actually busted a move higher than that. And the high for the market at the closing high. Remember, when you look at your quotes, it only gives you the closing high, not like end of the day closing high, instead of what the actual high was intraday. So the closing high on the S&P 500, technically speaking, was 3,017. However, that day, if I remember correctly, and remember, futures are obviously going to be different. They're more liquid and they trade after market and pre-market. So, but 3,017 was the S&P 500 high, all-time high, incredible. And I think that day we had gone to 3,022 or something. So anyway, and now we are at 29.95. So when you look at the bigger scheme of things, sometimes I wake up because I'm an idiot like a lot of other emotional traders too. Sometimes I'm just less of an idiot. That's all. In this business, you just need to be less of an idiot, emotional idiot. That's all. Than the rest of the masses, and you're going to be fine. So I say, I look at the daily picture. I'm like, look at this friggin' market. I mean, yes. Now we're options traders, so of course we get hit when the market is down 50 points and we're on a Boeing or something. Boeing, by the way, is up $8 after hours, 7, because they just mentioned how much charge they're going to take for the 737 disaster, the crash. They're going to take a $5 billion charge. Great. What's $5 billion? Chump change for Boeing. Stock's up 8. That's just the way markets work. Anyway, and there was a testimony from a very sad Ethiopian gentleman whose whole family perished in 737, saying, about what had happened and blaming Boeing and stuff. And I think that's wrong. Boeing is one of the finest American companies in the world. They treat everyone fairly. They are the true Americans, no color, creed, whatever, just brains. They have the finest engineers and everything. What happened in the 737 MAX was not Boeing's fault. They didn't cheat. I know that for a fact. Okay? The technical malfunctions and everything, something just happened. Boeing didn't cut costs like some sleazy company in New York City or Queens or wherever in California or in Miami. I'm just picking, towns and states. That's, I'm going to cost cut, so I'm just going to basically just put a bad, cheap part in there, plastic part instead of a metal part is going to break. No, Boeing didn't do all that crap. Okay? Things happen. They made amends. And the 737 will be up in the air in the next couple of months. So, that's my thought. In the meantime, we trade the chart on a technical basis. I have the Boeing charts out there. You guys feel free to look at it. So that's it. So from the month of June, July, this is what's going on. Lots of volatility, by the way. Lots of volatility, but look at the uptrend. The upper end of the trend is that 30, 40 range. Next. So now we can zoom back to what we are dealing with, because after all, the volatility algos, and this all of you must understand 110%, that the volatility algos, the algorithmic high frequency trading programs, that move the market down 150 points in about 10 minutes, allow us to make 18 cents to 60 cents to $1, are all manipulative algos. Don't forget one thing. I come from 14 years on Wall Street. How do Wall Street banks overall make money? By creating volatility. When I meet one of my neighbors who's a great Deutsche Bank guy, real smart guy, you know what they live for? Can somebody guess like what they live for? Do they live for a bull market? No. He's a Deutsche Bank derivatives guy. Bond, credit, real smart cookies. What do they live for in the stock markets? Take a guess and answer me, please. Because I just talked about it. I gave you guys the clues. What do those investment banks on Wall Street overall live for to make their trading revenues? How do Wall Street banks, the big trading desks on Wall Street, institutional trading is, look at my chart, look at this movement. Futures are
I,
up.
I
Futures
think
are up
I think they
9.5.
make their money.
One second.
Yeah.
Somebody
Yeah.
please, is that you? There's too much background feedback coming back. What do the Wall Street banks look for to make money on their trading desks?
Making sure they shake all the retail investors out of their.
What is the word for that? What do they create in the market?
Volatility.
Thank
With,
you. They create massive mess. Screw all of your heads up. So you need the trading savior for me to show you the charts and say, frigging buy here. To buy here, forget the 150-point dip, because all the indicators saying, and this, by the way, is not showing any indicators. One of mine, I'm straightening that straight out, not for you guys, people are going to be listening later. All my reasoning why I bought today at the bottom on the slow stochastics bottoming, and the crossover was up even when we were down 150 points. With the crossover on the stochastics up, still crossovering up, and the market's down 150 points. What is that term called? Come on,
Divergent?
Trina,
Is it divergent?
Yeah. Who said that?
I did, Adam.
And House didn't say that? And Mike didn't say that? And Trina didn't say that? Adam, you friggin' are going to be the best, one of my best traders ever going forward. Yes, it's called a positive divergence. When the internals were crossing over, and please feel free to look at my charts before bedtime. Grab a beer, grab a tea, grab a coffee, whatever you drink, or a kefir, some yogurt shooting down. That's great for the stomach, by the way, before you go to bed. And that's why I have so much energy at my advanced age of 91. So bottom line is, when the crossover was continuing on the stochastics and the externals were falling 150 points, that's called a positive divergence. Thank you, Adam. Exactly. So that was one of my reasonings too. And then I looked at the levels and stuff, then I saw the candles appearing. Remember, when that 150-point drop happened, there was a big bloody red candle taking everything down. And I was wondering why. There was no tweet from Donald. There were no ugly comments coming out of China. There wasn't anything that I could see. And I scour major news services, and two of them that I pay for. It was just a random sell program to flush people out and take care of the margin calls, institutional margin calls that were pent up over the last 3 days because we were down. Do you understand what I'm saying? Since the 16th, we were down. So there were some margin calls that are built up. They needed to flush it out. Exactly. That's why technical analysis is so key to making money. Okay. So month of July looking like this, and given this is what we are, futures are almost up 10, by the way. This is where we're going to go by the time we finish our session. So I'm not just going to pat myself on the back. I'm just going to basically wake you guys up, all of you, and everyone else who's going to listen to this. Nobody draws charts like I do. Now, how we manage it along the way, that's your problem, not mine. Because I'm working on that problem myself, because I'm selling stuff a little bit too early at certain times. I should be a completely like an obedient blind squirrel who just follows my charts. I try, because these charts cannot be any more perfect. Dead serious. So that's what the part we have to all work on, is to stop selling early and to start buying when these things are happening. Now, at this point, this is where we are. This is the highs on the market on the E-minis. Okay, this is your left shoulder. Now we are busting through the right shoulder as we speak. How monumental. This is like an Oscar show for, let's say, trading. Okay, now are we going to bust a move here? I think so, but we have a downtrend line right there. So as a SPY trader, or trying to manage your profits on the other side on the stocks that move with the market, remember, we trade all different sectors of stocks, right? But some stocks trade just with the market. So, and SPYs obviously being the biggest correlation because they're the spiders. They're the actual asset class of the E-minis. So the bottom line is that at this point, so if you're going to buy it around here or buy it around here, then obviously you're going to be selling here. Now, if it hits here, I say, if somebody says, well, can you tell me what the market's going to do after that? I'm going to say, yeah, I'm going to tell you what the market's going to friggin' do after that, because we are going to create a right shoulder. Here's your left shoulder. The more you focus on these charts, the more you learn from the advanced coaching sessions, the more you really trade, the more you will see patterns you have never frigging seen in your life. And you'll almost be like that market crystal ball kind of thing. Because a lot of the charts that we're showing and how the markets work are literally crystal ball. It's a fact. Now, humans are normally, the human DNA of a normal human being when it comes to trading is to lose money. Just remember that. Our brains are wired to lose money. If you don't believe that, go look at yourself. Our brains are geared, the DNA in our brain is geared to losing money. It's a fact when it comes to trading or investing. So you got to switch that around. If you think that we were wired to make money, there's something really wrong with you. The human brain is wired to lose money. And all the negs and the misery out there, and all the guys complaining and making excuses. Oh yeah, technical analysis doesn't work, and it's a matter of luck. And hey, if you're lucky, you make money. Garbage. Luck is created to a large degree by being a tactical trader. That's why you can catch those monumental moves, and not just say, oh, it's lucky. Luck always has a factor. I know that. But why not diminish the level of uncertainty and luck by tracking and trading the charts? So this is the pattern we're looking at this point. And I believe we're going to hit a new high. Will that happen by tomorrow? I have no frigging clue. But if we do hit a new high, I can assure you that given the ferocity of so many stocks that are still way off the 52-week highs, we are going to bust a friggin' move higher. And we are going to hit those levels like, wow, and the shorts are going to keep on shorting. See, in order for these markets to go higher, and I want somebody to answer this, please. I love silent answers, but I'm not a mind reader. So I would like a little bit of participation other than Adam. In order for the markets to continue higher, we need a couple of things. Okay? We need strong earnings from our companies, or no, actually weak earnings for the last quarter with some reasonably good guidance. Because every single BS multi-million-dollar overpaid bearish analyst on Wall Street, that's what they mostly are. That includes a whole bunch of my old friends. Okay? Are negative. They have cut earnings guidance in a big way. Companies have also warned slightly. They're all bears, majority of them. I think the guy who had the highest thing was Tom Lee. You know, the chubby Chinese guy, Tom Lee. I've actually met him a couple of times on Wall Street back in the days. Look, you know, I almost used that word. He's brilliant. He's the only guy who said buy the friggin' market back at the 2009 lows and going forward. Very soft-spoken, very smart, very smart. He's not a day trader. He's a market forecaster. Now he's got his own firm. Tom Lee. So earnings are important. The guidance part. So everyone's cut their earnings guidance, and we're in the middle of earnings season. That's why I'm focusing on this tonight. So all of you kids kind of wake up. So everyone's cut their earnings guidance. So a company just coming up with slightly better numbers will just skyrocket. Will skyrocket. Companies I'm talking about. After all, we're stock traders, right? Enough stocks in the market which are going berserk higher that I've showed you guys, regardless of the market. So earnings are one of them. The other factor that we need from a technical standpoint, and this has to do with the bearish contingent on Wall Street and the hedge funds and stuff, which are majority bearish, is what? What is the other technical trading factor that we need in order for the market to keep on surging higher in between pullbacks? Think and answer. That's what makes America smart. Please. Do we have to call names? Come on, guys. Trina.
Yeah, they need people to short the market.
Thank you. Thank you. Thank you. You already answered. Thank you, Trina. We need the bearish contingent to keep on shorting the frigging US market. Like I always said, waving a small flag and saying make America great doesn't make America great. What makes America great is America business. Buy the US financial markets. I'm the biggest patriot you guys will ever meet, okay? Hardcore. So I have always said this. If you believe in America, if you believe in American exceptionalism like I do, truly, great minds, all colors, creeds, and anything, it's the brain, not the brawn. The brawn is the military, but even then there's the brain. We don't get into stupid wars just for the hell of it. It's the generals who are smart who has to get into wars that we can win. So it's still the brain. So the fact is that these bears and these dogmatic shorts, I mean dogmatic, that means they are fanatical. And we don't like fanatics, right? We don't like fundamentalists, whether they're Muslim, Christian, Buddhist, or whatever. We don't like people who are fanatics. So these fanatical bears need to keep on shorting the market every time that they drop a bit. And I'm just showing you literally within a 1 week, 1 month time frame. Every time the market's dropped a little bit, and thank you, Trina, for answering that question. Take me out of my misery. So every time the market's dropped, they short it. And boom, boom. Little drop, they short it. They put in the big E-mini, the short orders, bam, they're shorting everything inside. Okay, it's all over. Great, it's all over. We already have the support level and resistance level where we can slip to. We could have gone down here. We could have done this. We didn't need to turn here. This was a big support level. This is a bigger support level. So we could have slipped a little bit more. So what? It'll give you a cheaper buy on a whole bunch of things. And now we are creating a huge W. So yes, we need the shorts to keep on shorting. We do. And there are a whole bunch of hedge funds from New York to California and overseas who keep on shorting our markets. George Soros, who's a brilliant guy, is the ultimate shorter of US markets. I think he still is. So let him keep shorting so we can go higher. Okay, so you got the point that I tried to make. So at this point, looks like this is the formation that's taking place. That means we're going to hit road bumps, obviously. That's why I draw these charts, downtrend lines, this and that, pull back a little bit, and then hopefully make a new high. Now, high or no, I said this in my previous webinar, we don't necessarily need the markets to just go on a one-way train up, because that means we will never buy anything cheaper. We need to buy things $5, $10, $15 down so we can make $20 on the upside. So that's it. Now, the longer term picture, without holding you guys up, then we can look at a few charts because that's what it's all about. This is your S&P chart. Great. I reminded people that these are the charts they need to use for, this is the actual S&P. 1 hour. I don't know why it didn't have this line. Perfect. What does this land up? Wow, 3,100. That's like asking a lot. But hey, technically speaking, this is your uptrend channel. ladies and gentlemen, that started on look at the date, June 26th. June 26th, this uptrend channel. Forget about the rest of the stuff. This was your rising wedge, the consolidation channel that lasted a bunch of days, like maybe like 5, 6, 7 days. The shorts kept on shorting, and then they got their you know what handed, and then they all ran away, bleeding and big time, billions of dollars in losses, because this is what happens. Rising wedges, consolidation channel, and then we entered an uptrend acceleration channel, which we were fine with till yesterday, 10 a.m. So we dropped out of it. Everyone freaked out. I'm saying, okay, technically buy this, you know, you got to scale in, dollar cost average, blah, blah, blah. And now this is happening. So given where we are right now, with futures up almost 10, people who bought today on my alerts, whether they be the spies, they're already making money because the market came back strong. And tomorrow morning, they're just going to sell at with the futures opening, hopefully at these levels, and they would have made a fantastic week. End of story. This is a recurring game, ladies and gentlemen. Now, in order to do it, you have to look how oversold we were. I showed that. I even put arrows here during the day. Every time you get this oversold on the 1 hour chart, you don't need to frigging reinvent the wheel. The market is going to bounce. End of story. Doesn't have to be the next 15 minutes, doesn't have to be in 20 minutes. It will do it over the next 24 hours. And then rinse, repeat. So we're going to get overbought. Either it's going to move sideways for a couple of days. Now, can somebody who's been with me, I know House says, Mike has been for 3 months, so I'm not going to hold him to it, but Trina, been with us. What is so important about next week?
I believe it's the rate decision.
No, that's the 31st.
Okay.
So that's the week after. Next week, basically after the first half of next week, it's the end of the month. What happens at the end of the month with funds and institutional things? They need to buy stocks to show in their portfolio. We call it window dressing. Okay, so I've explained that many times, and some of you are focused obviously know that term. Portfolio markups and window dressing is a common occurrence, specifically with mutual funds and then with hedge funds. They like to show stocks that are doing well, because the end of the month they got to send a report to their investors and to their shareholders, and end of the quarter is more powerful. That's why we had such a strong finish to June. So they basically go ahead and have to buy the stocks that have done well. There is an artificial markup that goes on. It's called adding beta, means stocks that have moved up, high beta momentum stocks, to show alpha. Alpha means rate of return. Do you all understand what I just said? So if you're a fund manager, your job depending on what stocks you own overall and how you did, but more importantly, what you could your shareholders will say, oh, you didn't own naming a stock that has come up like huge. Okay, one that we just Shopify that we were doing really well on. Oh, you don't own Shopify? What's the fund manager goes, no, I don't own Shopify because it's so frigging overvalued. Great. So the biggest shareholder will say, okay, I think I'm going to fire you. So what do they do? They'll buy 100,000 shares of Shopify just to show it on their books so they look smart. You understand what I'm saying? It's called window dressing, artificial portfolio markup. Happens all the time. So there is generally a tendency at the end of the month, depending on how the markets are doing, which is pretty much an uptrend, they need to buy those stocks. You get a huge move up a couple of days towards the end of the month, and it's big. So, saying all that, this is where we are. Now, this is I always like to ask myself a question, and you guys should ask yourself a question. So this is your uptrend channel, acceleration channel that started June 26th. We fell out of it yesterday. Now, what would happen? Everyone likes to think, oh, by the way, there's some blowback coming on somebody's mic. Just mute it, please. It's almost like I have water in my ears, you know, like eardrums. Can somebody mute their mic, please? Thanks. It's probably Adam. So ask yourself a question here. And this is going to set you up like how you trade. That's why I'm spending so much time on this tonight. Because if you're always scared that the market is going to drop 500 points and not really looking at the charts and stuff, because the charts will always tell you when we have the flash crashes, right? But if you don't have your mental bias on the upside at this point, given what we're seeing, then you're going to keep on selling things too early, making a little money, and missing out on all big trades. And trying to be a smart aleck and shorting and then losing your butt. Believe me, billions have been lost trying to short this market. Billions. Ask Two Sigma Fund. All right? And George Soros. So, bottom line is, what would happen if we entered the acceleration channel? Obviously, when we hit the highs on the market, which was on the 15th, there was a standard pullback, and this is the standard pullback. And as you guys know by now, this is a bull flag. So now that we're creating this candle here after hours, futures up 10, by the way. Did I tell you guys that like a little less than an hour ago? Exactly. Futures are up 10. I don't predict numbers. I understand my charts. So if this candle expansion zigzags its way higher, that's exactly what the market's going to do. And then hits this again, pulls back, and then busts a move inside the upper end on this acceleration channel, you're going to see fireworks in this market like you've never seen before. In fact, you guys have seen enough fireworks in the market that some of you have missed repeatedly. And the market will, at that point, enter what I call, what Elliott wave theory calls wave 5, maximum velocity. Now, why? And think and answer, because the more you think, the better, more money you're going to make. Because I can't make you guys think. Why is there a possibility that we entered this zone other than the technical factor? What's the fundamental reasoning why we could possibly get back into this acceleration zone that started on June 26th?
The China deal.
That's one reason. Stay on the line for 1 second. There's another reason that we're going through right now. The China deal is definitively a reason. Stay for 1 second. I'll be back. 1 second. Ladies and gentlemen, thank you for your patience. 1 second. Had to grab my Gunner computer reading glasses or else I wouldn't be able to see everything. Everyone there?
Yep.
Test.
Yep.
Okay. So this is a real important reason. This is why I think there's so much opportunity in front of us for a limited period of time. Aside from the technical stuff. What are we going through right now as in a time frame in the market? Need you to think and answer. It's not a hard question. What just started last week?
Earnings season.
Thank you so much. Who's this? House?
Yep.
Okay, sounds good. So we are, thank you, sir. Excellent. So earnings season. So what happens during earnings season? Right now, most analysts are really bearish. I think they're expecting like S&P earnings to be down like 3-4%. You know, those macro numbers stuff. Don't hold me to it. But sorry, earnings season. So what if earnings are a little bit better than expected? Which is starting to show up. Microsoft is up to goddamn $140. Satya Nadella, the skinny guy, I don't know if you guys know who he is. He's the guy who runs Microsoft, the one that Trump called to the White House and gave him a little, thing. But now they're buddies, by the way. The only guy that he doesn't like on the tech side, really, Donald, is Bezos, because he's owns the Washington Post. Satya Nadella, he's comfortable with. So, wow, Microsoft's at 140. I told you guys to buy the calls. CrowdStrike up 14, by the way. We're gonna look at that before you go to bed, all right? So earnings season, exactly. Thank you, House. So what if earnings are a little bit better than expected? What if the world's not falling apart because we have this major trade war with China? Because it looks like our companies, which I've always believed, can handle this stress that's created, and it's certainly a lot of stress that's created by the trade war, because it's a global interlinked economy, supply chain and all that stuff. Then we move in here. That's it. And the bigger companies delivering, look, Netflix is a huge company. It's not global. It's global, but it's not really relevant to China or anything like that. So Netflix is the one that croaked. We still made money on that. I want you guys to go back on the Twitter feed and see how we did that. Which some of you, if you haven't seen it, then you have no idea how to do options. We did a straddle, which I explained earlier, and we'll take a look at it. So yes, thank you very much. So earning seasons can propel us, in my opinion. That's why it can forget propelling earning season for the big boys. How about your portfolio? How about doing a couple of cheap calls? $1, $1.50, 60 cents, 80 cents, $2, $3. Don't go overboard with the price. One of the companies that we used to trade back in the days, Intuitive Surgical, ISRG. Stock is up about $11, means nothing. Why didn't I propose it as earnings? Can somebody tell me? These are the robotic Da Vinci robots, which do all kinds of surgery. One of the most unbelievable frigging robotic companies in the world. Why didn't I propose it for earnings?
They're expensive.
Yes, Trina, you're like hitting it. Yes, they're frigging expensive. The calls are like out of control nuts. You're right. So unless the stock moves 30, 40, 50 bucks, which we have caught in the past year or two, I'm not going to go frigging pay $18, $19 for a call. One call cost me $1,900 bucks. Like, what? Doesn't matter how much money you have. Thank you. Great answer. That's right. So said nope. That's it. So earning seasons can propel us in here, and let's try to make the best out of it. So saying all that, let's take a look at I'm going through my Twitter feed here on this side. Let me pull that in. And feel free to ask me any questions along the way as we this is the story of the market. You think I put this for fun? I actually put it. Everything that I put out there in my Twitter feed has to have an impact. This is the story of traders out there. I don't give a crap how smart they are. The non-technical, non-tactical clueless A trader, it was doing this when the markets were falling 150 points today. This is what they were doing. Panic. Blowing out of their position. Stops getting triggered. Not just that, that was happening across the day trading community too.
Hey, Frank.
Okay. So Yeah, go ahead while I scroll through.
Can you look at the McClellan oscillator before the end of the night?
Sure. I'm trying to, so many good stuff here, guys, seriously. Somebody should pay me some real big money to put it out there. Maybe I should talk to Goldman Sachs. You guys want to friggin' make some real money? Instead of, Goldman Sachs' money is always made in investment banking. Their traders used to be really good. And now all they do is try to create volatility to make money. Trading desks on Wall Street want volatility, heavy duty chop. So like I was telling you about my Deutsche Bank friend who walks his dog, and a real smart guy, they always talk about the vol moment. I said, okay, that's great. When's the next vol moment? You know what the next vol moment means? When basically the VIX goes from 15 to 30. That's the only time they make money. Okay, that's their idea of a good time. While mom and pop in the rest of America and the markets are crashing. Really patriotic move, right? The vol moment. That's what they wait for. Because most of the times they're just shorting the market. VIX going to 15 to 30, that means mom and pop working their really hard out, their pension fund, the teachers fund, all the retirement plan, state funds that the average person automatically puts their money in through their paychecks are crashing. Is that great for America? I don't think so. It's great for trading desks on certain Wall Street firms and dogmatic bears on multiple platforms. Look at how many bears are on StockTwits, for God's sakes, and it's a great platform. Howard Lindzen has done a great job. But look at every single other guy. They're all freaking bearish. And those days that the markets are down 300, they think they just conquered the world. In the meantime, they're losing money right, left, and center. So let's talk about the Netflix. Let's talk about real trading here. I'll try to cut this, 9:47. I'll get it done by 10. All right. And I really am very impressed with all of you that you guys are actually listening to all this fantastic stuff with so much patience. I mean, really, I mean, that is something. And I have to give myself a pat in the back that I can actually talk sense for 1 hour without completely losing track. So Netflix. So the strategy was to buy these, buy the Netflix July 26th. That was next week. I always gave myself time. These cost around $8. So let's say you bought one call at 8. Oops. One call at 8 on the long side. That's a straddle on the long side. And on the short side, you want to cover yourself. I told you guys to buy the immediate. Remember, when bad things happen in life, it happens immediately. Yes or no?
Yes.
Exactly. Trading's just like life. Trust me. I've become a better man by being a trader. So when bad things happen, it happens pretty much like it just feels like it's just happening now. When good things happen in our lives, does it happen immediately? When good things happen in our lives overall, does it happen immediately?
No.
Right. So apply that in options trading. So if Netflix was going to croak and completely fall, immediacy, everyone reacts to the situation immediately. So buy the ones which expire Friday. If Netflix was going to do some good things, yes, it would also react immediately, but it might take a couple of days sometimes. So I bought next week's. Did you understand my reasoning? So I made the puts. I do this all the time. That's why I told you guys not to buy tomorrow's calls on my earnings team, which, by the way, will deliver bigger rewards than next week's. But why should I have 1 day expiration, 1 day time value left? I want to give myself a little bit of time so I can dollar cost average if needed. That's why I told everyone, said July 26th. And the ones which don't have weekly calls, I said August 16th. Get it? That's how you got to do it. I teach all this stuff on ACS, and believe me, people who have worked with me, they are doing very well. So then the puts, I knew that shit, if it hit if crap hit the fan, whatever, it would happen immediately. So I bought, so these are July 26th calls, where I gave myself more time, and the puts would be for tomorrow. So these puts cost $3. So one put, that's all explains right here. Simple. Okay, cost 3. This costs 8. This costs 3. Mike, you with us so far? Mike Murphy?
Yes, Frank.
Fantastic. You sound great. So 3. So this would be $300. So that's so this 300 went to, this actually went to 20. So 300 went to 2000, or 1965 it went to 2000. And the 800 went to, oops, sorry. The 800 went to $20. So you lost $780 on the long side, and you made $2,000 on the short side. So net, you did $1,220 in profits. Everyone with me so far? Yes?
Yes.
So basically, you put in $1,100. This is what it comes down to. $1,100, right? You spend $800 here, and you spend $300 here. So out of pocket, you spend $1,100 on that straddle, and you made $1,220. So your profits overall, no, you actually made $2,000. Sorry, you made $2,000 and you lost $800. So that's $1,200 overall. So anyway, now the only way these straddles work, just so you know, is if the stock moves in a big way. If it moved just a little bit, we'd have lost on both ends. If the market, a lot of times what the market makers will do, they'll keep the stock flat, and then people lose on both ends. But I would probably be buying on the long side if the stock had a bias towards the long side, depending on where it went. So next, your question was on the McClellan oscillator. What, on the overall market?
Yes.
Okay.
Just to show the chart.
The McClellan oscillator right now is somewhat irrelevant because we are not in extreme market situations. So the McClellan oscillator is one of the most important indicators if the market is going through 600, 800, 400 plus point moves overall. So that's why the McClellan oscillator overall, one second, is in an uptrend. Get that? So this is your McClellan oscillator right now, but it has lesser relevance. Remember, and I teach this on the advanced coaching sessions, certain indicators will have more relevance or weighting at certain times of the market. So looking at the McClellan oscillator right now is really not telling me much at all, other than the fact this is what it's telling me. The last time when the markets had dipped, when we were at around 2,900, oscillator was here. And right now, the same oscillator is exactly at the same level. But McClellan oscillators are when you get these sharp moves down in the market and they dip to minus 200, or they dip to minus 300, or they dip to minus 250, you want to buy all hands down as one of the major indicators. So right now, the McClellan oscillator is not really telling me anything other than the fact that it's kind of dwindling around in between that. It is not a weighted signal at this point. Do you understand?
Thank you.
Now, the other thing to keep in mind is the market is pretty overbought. So best case scenario, the S&P 500 gets to around 3030. because the stochastics are starting to cross over down. So trade with one eye open. Selective stocks, but the overall market externally looks pretty damn good. We still have room to move towards that 30-30 level and that channel that I showed you earlier on because of earnings. But in the meantime, this is still in an uptrend. I don't necessarily like the fact that it's crossed over down. It doesn't mean a heck of a lot because it's a strong market, but I'm watching this also pretty carefully. What I would like to basically, what I focus on, and all of you should too, is look at the 1 hour charts. Look at the 4 hour charts. The 4 hour charts is telling us they're going to rip the market higher. Right there. Watch. The 4 hour chart is the trader's chart who doesn't, remember, you can't always make money trading the daily charts. You understand that, right? Because the daily chart doesn't give you the opportunity to make money on a daily basis. That's for the longer term picture. But the 4 hour charts and the 1 hour charts are extremely powerful tools. So the 4 hour chart, as you guys can clearly see here, looking like this. Now, the crossover is about to happen. Let that get overbought. That means we probably retest the highs again. And at that point, you will most certainly get a pullback. By that time, the stochastics will be overbought. This is not rocket science. See the pattern symmetry? What happened here? That's the same thing happening here. We tested the 50-day moving average for the 4 hour, and now we're bouncing up. Now, let's talk about stocks. The reason I don't want to spend the next hour, which so you guys certainly don't want to, is all my stock charts and stuff are right there on the Twitter feed. So just go through that. But talking about earnings, these are the couple that we did today. CrowdStrike, that's a new IPO, serious company. They are most probably, in my opinion, based on my work experience back on Wall Street, these guys are very young. They've been around for a long time, but they just went public, as you know. They went public on June 12th at around 55. Put this stock on your radar. This is going to be a great trading stock. Already told you guys to buy it today. It's up 14 bucks. Right now, it is here. Exactly where I showed my uptrend line. It is right here, right now, after hours. That's where it's going to open and probably bust a move higher. Now, I want to show you a trick about how you trade charts. It's a very simple trick. So the stock came public at 56. I didn't buy this IPO on Crowd, by the way. Don't know why. We buy a lot of these great companies on IPOs, but I didn't buy this one at IPO. Yeah, 56. So follow this carefully. All right, quick lesson. So it came public at 56, went berserk. Because great cloud company, innovative technology, like serious, like an Amazon could buy them, Google could buy them, and that's what companies do, right? Instead of reinventing the technology, you just buy the guys who've been working for it for 10 years, just went public, they want to buy them when they're still cheap. So the stock jumps from 56 to 80. How many points is that? 24, right? The insiders sell, guys who bought the stock on IPO day. We've done this with a bunch of stocks. 56 to 80, like it's been 24 points in how many days? 1, 2, 3, 4, 5, 6. Remember, no options at IPO. It goes to 80. That's 24 bucks. So you bought, let's say you bought 100 shares that cost you $5,600. Use some margin to buy it, or just bought it with cash. I don't know. $5,600. You just made 8,000. Who needs a frigging option? How many days? 1, 2, 3, 4, 5, 6. Big time. See you later. You sell the stock. The guys who got in at that $80 level, thinking it's going to go to 100. They start collapsing. Like, oh my God, let's get out of town. CrowdStrike just went belly up. Company sucks. Blah 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 blah. Stock comes back to 60, almost where it came out at. Since then, it's been climbing. Now, I drew the charts. So remember, technical analysis says that you need at least a couple of months in order to draw the chart. So I drew this with certain degree of accuracy. But it's only been 1 month since they came public. Right, guys? Are you guys with me? Is anyone there?
See you.
Okay, sounds good. So here is how you look at it. Stock's right here right now at 85. Now somebody say, oh my God, it's so overbought. The way I look at it, if their numbers were that strong, I didn't even look at the numbers, I just saw the stock movement on that. And there were options now, so those options are going to go berserk. The 80 options were $3 and change. The 75 options were 5. They're probably going to be at 15, and the $3 option is probably going to be at 10 tomorrow. So here's my point here. This is the way you look at it. Is it really overvalued? I don't know. All I know is they hit 80. So right now they're at 85. So that itself is telling me that there is ample room to move. And the simplest way that I can show it, the stock 60 to 80 is 20. That's your trading box. It just broke out. Add 80 to 20. What does it come to? 100. Is it possible that the stock goes to 100? Yes. Can we show it technically? Yes. Right there. Right there, ladies and gentlemen, is your technical chart. Now that the stock is about to enter into the upper channel, it is still. So if you miss the earnings, you still have room to move because the momentum should carry into 90 and to 100. Pretty simple. Adam, you with us? Adam, you there? Okay, I do have to sign off. Skechers, another company that I told you guys to buy. This is what happened today. It was 34, now it's at 40. This stock has much more room to move. Skechers has a massive cup and handle. Adam, you still here? Trina, can you hear me?
Yep, I can still hear you.
Yeah, I don't know. Sometimes, the GoToMeeting like cuts off people, so I didn't know. So this is a massive cup right now. The stock is right now at a new high. Wow. I don't really trade Skechers. Now I'm going to put this on my trading list. So Skechers makes what? The shoes, I know, but they make the Uggs?
Now I have no idea.
Okay. Uggs, those snow boots.
Yeah,
They're really fashionable. But Skechers makes that? No.
I don't think so, but
Uggs is not an actual company. It's just a brand. Okay. So the stock is right here right now at 40. This thing is going to bust a move. It's not a tech stock. It's a shoe company. What's the other one that's SKX? This is major trade. I traded only during earnings. I should actually trade it during normal times too. BlackRock, the world's largest money management company. Okay, Steve Schwartzman. That's BlackRock or so this is or David Rubenstein. I can't forget. These are like big time heavy duty New York players. So this stock right now is showing after hours at 484. Told you guys to buy it right here. So 484 means it's right here. Look at the overall picture of where it came from. Holy crap. I'm seeing this after a long time, by the way. So this stock is good for 500 to 520 if they deliver the numbers tomorrow. Keep these things on your radar. It's always good to rehash the trade stocks that we're trading and not just always stick to the same ones over and over again. So the stock is at 484. That means it's just right here. So technically speaking, it could bust a move over 491 Wow, I had this drawn a long time ago. I'm seeing this for the first time after a long time. But best case scenario, the stock goes to 520. Big time trades. All right, calls are not that crazy. Calls are not that crazy. The ones that I bought were the 480 calls at little less than $2, and the stock is already showing 484 on my other screen, and they haven't even delivered numbers. Whoa, somebody ran it up right before that. Hopefully they don't crash it. But this is pretty very nice looking. Whole pattern completion comes around 560. Do I think it's going to go there? I have no idea. Other stock that all of us know and Trina loves and has made money on it before is Tesla, correct?
Yep.
Thank you. Tesla is on an uptrend. I put out the Tesla yesterday. I haven't traded Tesla in a while, or if the trades have been very quick and sharp, Tesla is on a beautiful uptrend. It will, in my opinion, based on the China production numbers and everything, accelerating that, can hit 285. And you can see that clearly on the charts. I'm long the calls. That's an that is an uptrend channel. I don't want to overthink this trade. I just want to sit patiently. Look, I have the same faults as everyone else. I tend to sell things a little bit quicker than I should. But looking at this, 274, 284, 291 is the 150-day moving average. If it breaks above that, the stock will hit 320. On that note, ladies and gentlemen, Mike, I'm going to talk to you soon. Trina, Adam, any quick questions?
No, I'm good. Thank you.
Okay. Adam, any questions? Mike, you're good?
What does, on your Twitter feed, what does DT mean?
Downtrend.
Downtrend. Okay.
Downtrend line. Correct, sir. DT is downtrend.
Thank you.
Yep, absolutely. Okay. I'll be seeing you guys tomorrow. Have a great evening. God bless you all, and thanks for making my evening of being here. It's fantastic to coach and go through this stuff that I haven't personally looked at myself. I haven't seen this, not this one, but the BlackRock chart, and that's how we do it. Okay, keep trading, keep learning, stay strong. Let's not panic, and overall things are okay for now. And at one point the market will come crashing down, but in my opinion that's probably going to happen in the month of August, September, and October. In between, there'll be a couple of cycles of major moves down. That's it. Good night.